Before we dive in, a quick but critical disclaimer. I am not a certified financial advisor, and this presentation is for educational and informational purposes only. The world of investing carries inherent risks, including the potential for loss of principal. All strategies, platforms, and opinions discussed in this video are based on my personal research and experience. You should always conduct your own due diligence and consider consulting with a qualified professional before making any financial decisions. Your financial situation is unique, and what works for one person may not work for you. Okay, let's get into it. I remember my first real paycheck. After taxes, it wasn't a fortune, but it felt like it. I thought, this is it. This is the start of my financial empire. Then rent was due. My car needed new tires. I bought groceries, paid my phone bill, and maybe went out with friends once or twice. And just like that, poof, the empire was gone. I was right back at zero, waiting for the next payday. Does that sound familiar? It's that feeling of being on a hamster wheel running as fast as you can just to stay in the same place. For years, I believed that real investing was a secret club. It was for people with last names like Rockefeller, for Wall Street guys in $1,000 suits who understood a secret language of tickers and charts. It was not for me, the person just trying to make it to the end of the month. I was completely, utterly wrong. And in 2026, that belief isn't just wrong, it's dangerous. It's costing you money every single day. The single biggest lie we've been told is that you need a lot of money to make money. The gatekeepers have been fired. The walls of Wall Street have been torn down and replaced with something you're holding in your hand right now. Your smartphone. The problem is no longer access. The problem is noise. You go to the App Store, you type in investing, and you're hit with a tidal wave of options. Hundreds of apps, all with slick logos, all promising to make you rich, all screaming for your attention. Which one is actually for beginners? Which one is secretly charging you fees that eat away at your money? Which one will crash during the most important trading day of the year? It's a paralyzing amount of choice, and the fear of picking the wrong one is so real that most people just give up and do nothing. And doing nothing is the only choice that guarantees you lose. That is why I created this video. We are going to silence the noise. I have spent the last 6 months deep diving into the world of trading apps. I've opened accounts, I've linked my bank, I've traded stocks, ETFs, and even dabbled in options on over a dozen different platforms. I've read the fine print. I've sat on hold with customer service, and I've tracked every single fee, commission, and charge to find the absolute truth. And I've distilled all of that research into a definitive, no-nonsense list. The top 5 free US trading apps for beginners in 2026. We're not just going to scratch the surface. For each app, we're going to break down the 4 things that actually matter to a beginner. First, user interface. Is it genuinely easy to use? Or does it feel like you need a pilot's license to navigate it? Second, the free trap. Is it actually free? Or are there hidden fees, inactivity charges, or outrageous transfer costs designed to trip you up? Third, education and tools. Does the app just throw you in the deep end? Or does it actively teach you how to swim with quality resources, tutorials, and research tools? And fourth, the growth ladder. Is this an app you'll outgrow in 6 months? Or can it grow with you as you become a more confident and sophisticated investor? The goal here isn't just to help you download an app. It's to empower you with the right tool to start building real life-changing wealth, even if you're starting with just $5. The difference between starting today versus a year from now could be tens, or even hundreds of thousands of dollars over your lifetime. That's the undeniable power of compound interest. So if you're tired of living paycheck to paycheck, and you're ready to finally take control of your financial future, you are in the exact right place. We're going to cover an app that's famous for its social features, one that gives you access to professional-grade data for free, and my number 1 pick, an underdog that I believe is the single best starting point for any new investor in America today. Let's begin. Kicking off our countdown at number 5 is the app that arguably started it all, the one that forced the entire industry to go commission-free. I'm talking about Robinhood. Now before you click away, hear me out. I know Robinhood has a complicated reputation. It's been the hero and the villain, sometimes in the same news cycle. But to understand investing in the 2020s, you have to understand the seismic shift Robinhood created. Imagine it's 2013. You want to buy a single share of Apple. First, you'd have to find a broker, like E-Trade or Charles Schwab. Then you'd have to fill out a mountain of paperwork. And after all that, to buy that one share, you'd have to pay a fee, a commission of maybe $7, $8, even $10. And then another $10 to sell it. For a small investor, those fees were a brick wall. It made no sense to invest $100 if you were going to lose 20 of it just on fees. The stock market felt like an exclusive club and you weren't on the list. Then two Stanford roommates, Vlad and Baiju, saw this and said, "This is insane." They saw that big Wall Street firms were trading stocks for virtually nothing, while regular people were getting gouged. Their idea was simple but revolutionary. A mobile app that let anyone trade US stocks with zero commission. No minimum balance. No jargon. Just a clean, simple interface on your phone. They named it Robinhood, the app that would take from the rich brokers and give to the, well, to you. And it worked. It exploded. Millions of people, who had never even considered investing, were suddenly buying their first shares of Tesla, of Amazon, of Disney. The single greatest thing Robinhood did for the world was making the stock market accessible. Its interface is still one of the cleanest and most intuitive out there. It's designed to make you feel smart and in control, even if you don't know the difference between a PE ratio and a pizza topping. Tapping that buy button for the first time on Robinhood feels like unlocking a new level in a video game. It's empowering. They also mainstreamed a feature called fractional shares. This was another game changer. Back in the day, if you wanted to own a piece of a company like Google, you might have needed over $2,000 just to buy a single share. It was prohibitive. With fractional shares, you can invest with whatever you have. $5? You can buy $5 worth of Google. $1? You can own a sliver of your favorite company. This lets you build a diversified portfolio, owning pieces of dozens of great companies, even if you're starting with just $100. For a beginner, this is an absolute must-have feature, and Robinhood does it beautifully. So you've got a beautiful app, zero commissions, and fractional shares. It sounds perfect, right? So why is it only at number 5? This is where the story gets darker, and where you, as a new investor, need to pay very close attention. The very things that make Robinhood so appealing are also its biggest dangers. First, let's talk about that game-like interface. When you make a trade, it used to shoot digital confetti across the screen. While they've removed that specific feature after a lot of criticism, the entire app is built around the same psychological principles as a slot machine. Push notifications about market moves, lists of top movers, and the constant flashing green and red numbers. It all creates a sense of urgency and excitement. It encourages you to do something, to trade. And here's a secret Wall Street doesn't want you to know. For 99% of people, the more you trade, the less money you make. Successful investing is supposed to be boring. It's about buying great assets and holding them for years, not trying to time the market based on a push notification. Robinhood's design can subtly push beginners into becoming gamblers, not investors. The second and much bigger issue is how Robinhood actually makes its money. If they aren't charging you commissions, how do they keep the lights on? The primary answer is a controversial practice called payment for order flow, or PFOF. This is a concept you absolutely must understand. When you place an order to buy a stock on Robinhood, they don't send that order directly to the New York Stock Exchange. Instead, they send it to a middleman, a massive Wall Street firm known as a market maker or a high-frequency trading firm. These firms pay Robinhood for the right to execute your trade. Why would they pay for your order? Because they can make a tiny profit on it. Let's say you want to buy a share of Ford for $10.50. The market maker might be able to buy it for $10.49 on the open market, and then sell it to you for your price of $10.50. They just made 1 cent. It doesn't sound like much, but when you multiply that by millions of trades every single day, it becomes billions of dollars. Now, is this illegal? No. Does it mean you're getting a terrible price? Not necessarily. The rules say they have to give you a price that's at least as good as the best price publicly available. But are you getting the absolute best possible price? Maybe not. That 1 cent difference, called the spread, is essentially a hidden fee. You don't see it, but it's there. Over a lifetime of investing, those tiny fractions of a cent can add up to a significant amount of money. It's the classic saying, if you're not paying for the product, you are the product. Robinhood is selling your trades to the highest bidder. Finally, there's the issue of trust and reliability. During the massive market volatility of the GameStop saga a few years back, Robinhood infamously restricted buying of certain stocks. The platform has also suffered from major outages during critical trading days, leaving users unable to access their money or manage their positions. For an investor, that is terrifying. It's like your bank locking its doors when you need to withdraw cash. While they've likely improved their infrastructure since then, that history has left a permanent scar on their reputation. You need to know that your broker will be there for you when the market goes haywire. So, who is Robinhood for in 2026? I believe it still has a place, but it's a very specific one. It's for the absolute beginner. The person who is intimidated by the old-school brokers and just wants the simplest, fastest on-ramp to buy their very first stock. It's a fantastic learning tool to understand the basic mechanics of buying and selling. My advice is this. Use it as a starting line, not a finish line. Use it to get your feet wet, to buy a few fractional shares of companies you believe in, and to feel the empowerment of being an owner. But be hyper-aware of its addictive, game-like design. Turn off the notifications. Don't get sucked into day trading. And once you've saved up your first $1,000 or so, and you start to feel more confident, it's probably time to graduate to a more robust, transparent, and trustworthy platform. It's a great entry door to the world of investing, but you don't want to live in the lobby forever. And that idea of graduating, of moving from a simple trading app to a more comprehensive wealth-building tool, leads us perfectly to our number 4 pick. What if you want the simplicity and zero commissions, but with a philosophy built not on frantic trading, but on automated, disciplined, long-term investing? An app that helps you build good habits from day one, almost without you even thinking about it. That's where our next platform shines. Coming in at number 4 is the platform that I believe is the ultimate antidote to emotional, panic-driven investing. It's called M1 Finance, and its entire philosophy can be summed up in 2 words: financial autopilot. Forget the frantic energy of day trading. M1 isn't built for that. It's built for something far more powerful for the average person. Building a disciplined, automated, wealth-generating machine that works for you in the background while you live your life. How does it do this? With a brilliantly simple concept they call the pie. Imagine your entire investment portfolio is a literal pie. Instead of apple or cherry, this pie is made of your financial goals. Now, each slice of that pie represents a specific investment, a stock or an ETF. You are the chef. You decide the recipe. You might say, okay, I want my pie to be 50% a slice of the total US stock market, like an S&P 500 ETF. I want another 30% to be a slice of international stocks for global diversification. Then, for a little more aggressive growth, I'll make a 10% slice of Apple and a 10% slice of a clean energy ETF. You build your perfect pie one time. You set your target percentages for each slice. And here's the magic. From that moment on, every single time you deposit money, whether it's $50 or $5,000, M1 automatically invests it across your slices to maintain your perfect recipe. You don't have to do the math. You don't have to log in and buy 10 different things. You just add money, and your machine does the work, buying fractional shares of every single one of your holdings to keep your portfolio perfectly balanced according to the plan you created. This single feature is arguably one of the most powerful tools for a beginner investor. Why? Because it systematically removes the single biggest destroyer of wealth: emotion. We've all felt it. The market drops 3% and that voice in your head screams, "Sell everything." A meme stock goes to the moon and that same voice yells, "FOMO. Mortgage the house and buy it now." M1's automated system acts as a circuit breaker for that destructive impulse. You're not investing based on fear or greed. You're investing based on a pre-committed, logical plan. Your only job is to feed the machine by regularly depositing funds. It's the embodiment of the timeless advice to pay yourself first, but on steroids. Let's talk about another genius feature baked into this pie system: dynamic rebalancing. This sounds complicated, but it's incredibly simple and powerful. Let's go back to your pie. Imagine your apple slice has an amazing month and grows faster than everything else. Your pie is now a little lopsided. It might be 15% apple instead of your target 10%. Now, on a traditional brokerage, to fix this, you'd have to sell some apple and buy more of your other slices, a process that can be a hassle and might even trigger taxes. But with M1, when you deposit new money, the system is smart. It sees that your apple slice is overweight, and your other slices are underweight. So, it automatically directs more of your new cash into the underweight slices to bring your pie back to its target recipe. What is this doing without you even thinking about it? It's forcing you to buy low. It's automatically investing in the parts of your portfolio that haven't performed as well recently, adhering to the number 1 rule of investing. This automated discipline, happening with every single deposit, is what separates successful long-term investors from gamblers. And what if you're so new to this that you don't even know what slices to put in your pie? No problem. M1 has a whole menu of expert pies. These are pre-built portfolios created by M1's finance team, tailored to different goals and risk levels. You can choose a pie for general investing based on your risk tolerance, from ultra-conservative to ultra-aggressive. You can choose pies designed for retirement, targeting a specific year like 2060. There are even pies focused on socially responsible investing or specific industries like tech or healthcare. You can literally pick a professionally crafted portfolio, set up auto-invest, and be a diversified, disciplined investor in under 10 minutes. So, M1 Finance is the champion of passive, automated, long-term wealth building. It's free to use with no commissions or management fees on their basic accounts. It's a beautiful system. But, and this is a very big but, it is absolutely not for everyone. You need to understand what M1 is not before you sign up. The biggest drawback is the very thing that makes it great. It's terrible for active traders. If you're the kind of person who wants to buy a stock at 10:15 a.m. because you saw some news and sell it at 2:30 p.m., M1 Finance will drive you insane. M1 doesn't offer real-time trading. Instead, they have 1 or sometimes 2 trade windows per day. This means all the buy and sell orders from all their customers are executed at the same time, once in the morning and for premium members once in the afternoon. Think about that. You can put in an order to buy a stock, but you won't know the exact price you paid until the trade window closes and the order is executed hours later. For a long-term investor adding $100 a week, this doesn't matter in the slightest. Over 30 years, the tiny price fluctuations during the day are just noise. But for a trader trying to capitalize on a midday price swing, it's a complete deal breaker. Using M1 for day trading is like trying to win a Formula One race with a cruise ship. It's the wrong tool for the job by design. This also means you have less granular control. You can't place sophisticated order types like limit or stop-loss orders on individual stocks. Your command isn't buy 10 shares of Microsoft. Your command is add $500 to my pie, and M1's algorithm takes care of the rest during the next trade window. For control freaks who want to manage every single transaction to the penny, this can feel restrictive. So, who is the ideal M1 Finance user in 2026? It's the person who has a full-time job, a family, hobbies, a life, and they want their money to work just as hard as they do, without it becoming a second job. It's for the disciplined saver who understands that consistent, automated investing in a diversified portfolio is the most proven path to wealth. It's for the person who has read the studies, who knows that 90% of active traders fail to beat the market, and says, I'd rather just own the whole market and focus on what I'm good at. It's the ultimate tool for implementing a dollar-cost averaging strategy and building incredible financial habits from day one. If you want to be a stock picker, a swing trader, or someone who analyzes charts all day, you should look elsewhere. But if you want to build a sophisticated, diversified, automatically rebalancing portfolio that you can set and forget, M1 Finance is, without a doubt, one of the most powerful and well-designed platforms ever created for the beginner investor. It's a masterclass in behavioral finance, using technology to save us from our own worst instincts. But what if you want a middle ground? What if you love the idea of being a long-term investor, but you also want a more active role? What if you want to connect with other investors, share ideas, and feel like you're part of a community, all on a platform that still keeps things simple and commission-free? That's where things get really interesting, and it's the perfect lead-in to our number 3 app. Coming in at number 3 on our list of the top free trading apps for 2026 is Public. And let me be crystal clear, Public isn't just a trading app. By 2026, it's evolved into something far more powerful. It's the social network for your money. It's the answer to the question every single beginner investor has asked themselves while staring at a confusing stock chart at 2 in the morning. Am I the only one who feels completely lost right now? With Public, the answer is a resounding no. You are not alone. The entire philosophy of this platform is built on one radical idea: transparency. For decades, Wall Street was a black box, a secret club with its own language, its own rules, and high walls to keep normal people out. Public took a sledgehammer to those walls. The core of the experience is a social feed, kind of like a Twitter or Instagram feed, but instead of vacation photos or political rants, it's filled with investment ideas. You can follow brilliant financial minds, seasoned investors, and even your own friends. And you don't just see what they're buying or selling. You see why. They post their thesis, their research, their reasoning behind a trade, all right there in the open. Imagine this for a second. You're interested in renewable energy, but you have no idea where to start. Instead of drowning in a sea of Google searches, you open Public. You see an investor you trust just bought a small position in a solar panel technology ETF. You tap on it. You read their 2-paragraph explanation of why they believe the sector is undervalued, and why this specific ETF gives the best exposure. You scroll down and see a dozen other smart investors debating the idea in the comments, offering counterpoints and adding more context. In 10 minutes, you've learned more than you would have in 3 hours of isolated, confusing research. That is the power of community-driven investing, and Public is the undisputed king of it. Of course, they have all the table stakes for a modern brokerage. You can buy and sell thousands of US stocks and ETFs commission-free. They have fractional shares, which they call slices, so you can invest in a piece of Amazon or Nvidia with as little as $1. This is crucial because it means you can act on an idea you believe in immediately, without having to save up thousands of dollars for a single share. They also organize stocks into brilliant, easy-to-understand themes. Instead of having to be an expert on semiconductor manufacturing, you can explore the American-made theme or the artificial intelligence theme. It connects the companies you can invest in to the real-world trends you already understand, which is an absolute game-changer for beginners. But here is the single most important thing you need to know about Public, the feature that separates it from so many others in the industry. They do not use something called payment for order flow, or PFOF. Now, that sounds like a bunch of boring financial jargon, but I need you to lean in and listen to this. PFOF is the business model used by many free trading apps. In simple terms, when you place a trade on a PFOF platform, they don't send your order directly to the stock exchange. Instead, they sell your order to a giant Wall Street firm, a market maker, who then executes the trade for you. These market makers pay the app for the privilege of handling your trades. Why? Because they can make tiny fractions of a penny on every single share by executing your trade at a slightly less than perfect price. It might be a penny here, a fraction of a penny there, but when you multiply that by millions of users and billions of trades, it adds up to a fortune. The fundamental problem here is a conflict of interest. The app's primary customer isn't you. It's the giant Wall Street firm paying them. Their incentive is to get you to trade more often, not necessarily better. Public said no to this model. They are one of the only major platforms to flat-out reject PFOF. Instead of selling your trades, they route them directly to the exchange to ensure you get the best possible price. Their business model is aligned with you, the user. They make money through other means, like an optional tipping feature on trades and a premium subscription for advanced data. This is a massive statement. It's a declaration that their user is not the product. In an industry where trust is everything, this decision speaks volumes, and is a primary reason they've earned the number 3 spot on our 2026 list. So what are the downsides? Well, the social feed, while powerful, can also be a double-edged sword. It can be noisy. Not every opinion you read is a good one, and the temptation for a new investor to just blindly copy what a popular account is doing can be strong. You have to remember to use it as a tool for discovery and education, not as a replacement for your own thinking. The platform is also not built for hyperactive day traders. The charting tools are good, but they are not the hyper-complex, multi-indicator setups you'd find on a professional-grade platform. But for a beginner, that's not a bug. It's a feature. It keeps you focused on the long-term fundamentals, rather than trying to time every little wiggle in the market. Now, let's look ahead to 2026. Where is Public going? The answer is everywhere Wall Street has traditionally told you that you can't. They've already moved beyond just stocks and crypto. They're aggressively pushing into the world of alternative assets. By 2026, it's not a stretch to say that on Public, you'll be able to invest in fractional ownership of fine art, rare collectibles, venture capital funds, and even private credit deals. These are asset classes that have historically been reserved for the 1%, for multimillionaires. Public is on a mission to democratize them, allowing you to build a truly diversified portfolio that isn't just tied to the stock market, all from the same app. Furthermore, their integration of AI, which they currently call Alpha, will be seamless and predictive by 2026. Imagine being able to type a simple question into the app like, "What are the key risks for investing in electric vehicle companies over the next 5 years according to top analysts?" and getting a clear, concise, AI-generated summary of institutional-grade research. It's about taking a world of infinite data and making it personally relevant and understandable. So, who is Public for in 2026? It's for the investor who wants to do more than just trade. They want to learn. It's for the person who feels intimidated by the traditional solitude of investing and craves connection and context. It's for the investor who values transparency and wants to partner with a company whose financial success is directly aligned with their own. It's the perfect place to start your journey, build your confidence, and find your community. But what if you are the kind of beginner who wants to graduate from the basics fast? What if the idea of more data, more analytical power, and more advanced tools doesn't intimidate you, it excites you? What if you want access to the kind of charting capabilities and in-depth market information that professionals used to pay hundreds of dollars a month for, but you still want it for free? That's where our number 2 pick comes in. And it is an absolute powerhouse for the ambitious beginner. Coming in at number 2 is Webull. And let me be crystal clear. For a certain type of beginner, Webull isn't just the number 2 choice. It's the only choice. This is the platform for the person who says, okay, I've dipped my toes in the water. Now I want to learn how to swim like an Olympian. It's the step up. It's the upgrade. It's the free platform that hands you the keys to a professional-grade toolkit that, just a decade ago, would have cost a fortune. Imagine you're learning to drive. Our number 3 pick was like a perfect automatic sedan. It's safe, reliable, and gets you from point A to point B with minimal fuss. Webull, on the other hand, is like getting the keys to a high-performance sports car with a manual transmission. It's still free to drive, but it has more gauges, more controls, and a much higher performance ceiling. It demands a little more from you, but in return, it gives you an unparalleled level of control and insight. The first thing you'll notice when you open Webull is the charts. They are, in a word, spectacular. This is where Webull leaves most of its free competitors in the dust. While other apps might show you a simple line graph of a stock's price, Webull gives you a fully customizable charting suite. You can use candlestick charts, which tell you a rich story about each trading day, where the price opened, where it closed, and the high and low points of the battle between buyers and sellers. But it doesn't stop there. Webull gives you access to dozens of technical indicators. Now that phrase, technical indicators, can sound terrifying to a beginner. Sounds like complex calculus. But I want you to think of them differently. Think of them as different types of weather radars for the stock market. A basic app might tell you, it's sunny today. Webull's indicators tell you the barometric pressure, the humidity, the wind speed and direction, and the dew point. You can add indicators like the RSI or relative strength index, which helps you see if a stock is potentially overbought or oversold, like a crowd getting a little too excited or a little too pessimistic. You can add moving averages, which smooth out the day-to-day noise and show you the underlying trend of a stock. You can add Bollinger Bands, which show you the volatility and potential price channels. You don't need to learn all of them at once. That's the key. But having them at your fingertips means that as you learn, as you watch videos like this one and do your own research, you can start applying that knowledge directly. You can test theories. You can start to see the patterns and the language of the market that was previously invisible to you. This is the single biggest step from being a passive investor to an active, informed trader. And Webull gives you that power for free. But here's the most important feature, the one that makes Webull an absolute must-consider for any serious beginner: paper trading. This is not just a feature, it's a financial flight simulator. Webull gives you a virtual account, often funded with $1 million in fake money, that you can use to trade in the real market, with real-time data, without risking a single cent of your own hard-earned cash. Let that sink in. You can test out that new strategy you just learned about. You can see what it feels like to buy 100 shares of a volatile tech stock right before its earnings report. You can practice setting stop-loss orders to protect your capital. You can experience the emotional rush of a winning trade and the gut punch of a losing one, all within a safe, sandboxed environment. This is invaluable. So many new traders, full of confidence after reading a book or watching a few videos, jump into the deep end with real money and get wiped out. They make rookie mistakes, emotional decisions, and blow up their first account, vowing never to trade again. Paper trading prevents that. It's your training ground. It's where you earn your stripes. Before a pilot ever flies a 747 with 300 passengers, they spend hundreds of hours in a simulator practicing every possible scenario. Webull's paper trading is your simulator. Use it. Master it. Make your mistakes there. Learn your emotional triggers there. Prove to yourself that your strategy is profitable in the simulator before you ever deploy it with real money. This feature alone can save you thousands of dollars in beginner mistakes. On top of the professional grade charting and the indispensable paper trading, Webull also offers things that are usually reserved for paid platforms. You get access to level 2 market data, which sounds complicated, but it's basically a peek behind the curtain. Instead of just seeing the current price of a stock, you get to see the order book, the list of buy and sell orders waiting to be filled at different prices. It shows you the real-time supply and demand. It's like knowing not just the asking price for a house, but also seeing how many buyers are lined up with offers just below that price. It gives you a much deeper sense of the market's pulse. Webull also offers full extended hours trading.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
Both pre-market and after hours. A lot of the biggest market moves happen outside of the standard 9:30 a.m. to 4 p.m. Eastern Time window, especially after a company releases its quarterly earnings report. Having the ability to trade during these sessions is a significant advantage that many free apps simply don't offer. So who is Webull for? It's for the ambitious beginner. It's for the person who isn't content to just buy and hold, but wants to understand the why. It's for the aspiring swing trader or even day trader who needs powerful tools to find opportunities. It's for the data nerd who wants to run their own analysis and not just rely on talking heads on TV. If you see trading as a skill you want to develop, a craft you want to hone, then Webull provides you with the workshop and the tools to do it. Now what's the catch? Because there's always a catch. The biggest downside to Webull is the flip side of its greatest strength. It can be overwhelming. Opening the app for the first time can feel like sitting in the cockpit of a spaceship. There are buttons, graphs, and numbers everywhere. It has a steeper learning curve than the simpler, more streamlined apps. My advice is to take it slow. Spend your first week just in the paper trading account. Learn one new feature, one new indicator at a time. Don't feel pressured to use everything at once. The other potential downside is that, like many free platforms, its customer service can sometimes be less responsive than a premium, paid brokerage. You're not paying a commission, and that savings has to come from somewhere. And while it does offer cryptocurrency trading, its selection and features are not as robust as a dedicated crypto exchange. It's fine for dabbling in Bitcoin or Ethereum, but serious crypto traders will likely want a more specialized platform. Think of it this way: if our number 3 app was like getting a microwave, it's simple, fast, and does one thing really well, then Webull is like being given a full professional chef's kitchen. It's got a 6-burner gas stove, a convection oven, a sous vide machine, and a full set of Japanese steel knives. The first time you walk in, it's intimidating. You might just end up using the microwave function on the fancy oven, but the potential is there. As your skills grow, you can learn to sear, to bake, to braise. You can create masterpieces. Webull is that kitchen. It's a platform that you won't outgrow. You can start as a total novice and over time, use it to become a highly sophisticated trader, all without ever paying a single commission. The power it provides for a free price tag is simply staggering, and it easily earns its spot as the number 2 trading app for beginners in 2026. It's the ultimate platform for learning, for growing, and for taking your trading to the next level. So we have an app that's incredibly simple and user-friendly, and we have an app that's a data-rich powerhouse for serious learners. What could possibly be number 1? What could top the raw power of Webull? The number 1 app for 2026 is something special. It's an app that managed to achieve the Holy Grail. It blends the elegant simplicity of a beginner app with tools that are powerful enough for advanced users. But it adds one more layer on top of that: a secret weapon, a unique approach that directly tackles the single biggest problem that 99% of new investors face. It's a game changer, and it's coming up next. That single biggest problem is paralysis. It's the deer in the headlights feeling you get when you open a trading app for the first time. You see thousands of stocks, tickers, charts, and numbers, and your brain just shuts down. The fear of making the wrong choice is so overwhelming that you end up making no choice at all. Your money sits in cash, losing to inflation, while you promise yourself you'll figure it out later. But later never comes. Our number 3 app for 2026 doesn't just ignore this problem. It attacks it head-on. This platform is called M1 Finance, and its secret weapon is a concept so simple, yet so profound that it completely reframes how you think about investing. They call it the pie. Imagine your entire investment portfolio as a pizza pie. Instead of trying to figure out which individual ingredients to buy at the grocery store, you can just order a pre-made, expertly crafted pizza. Maybe you want a Supreme, which is a mix of aggressive growth stocks. Or maybe you're in the mood for a veggie delight, a socially responsible portfolio. Or perhaps a simple, reliable margarita, which could be a classic diversified index fund portfolio. This is exactly what M1 Finance does. They offer dozens of expert pies that are pre-built portfolios created by financial professionals for specific goals, themes, or risk levels. You don't have to spend weeks researching whether you should buy Apple or Microsoft or Nvidia. If you believe in the future of big tech, you can literally just select the tech giant's pie, and instantly you're diversified across the entire sector. Want to invest in companies that are changing healthcare? There's a pie for that. Want to mimic the strategies of legendary hedge funds? Believe it or not, there's a pie for that too. This one feature single-handedly vaporizes analysis paralysis. It takes the scariest part of investing for a beginner, the blank page, the question of, what do I buy? And replaces it with a simple multiple-choice question. What kind of investor do you want to be? But that's only half of the magic. The real power of M1 Finance is in its relentless, radical automation. Once you've chosen your pie, or even built your own custom one, which is incredibly easy, the platform takes over. You set up a recurring deposit, say $100 every Friday, and that's it. You're done. You never have to log in to place a trade again if you don't want to. When your $100 hits the account, M1 automatically buys tiny fractional shares of every single stock or ETF in your pie, in the exact proportions you specified. If your pie is 10% Apple and 5% Google, it puts $10 into Apple and $5 into Google all the way down the line. It's the most effortless dollar-cost averaging system on the planet, and it gets even smarter. Let's say the tech stocks in your pie have a great month, and now make up more of your portfolio than you originally intended. The next time you deposit money, M1's algorithm is smart enough to see this. It will automatically direct more of your new cash into the underweight slices of your pie to bring everything back into balance. This is called dynamic rebalancing, a sophisticated strategy that wealth managers charge a fortune for, and M1 does it for free every time you add money. It's like having a tiny, hyper-efficient portfolio manager working for you 24/7, ensuring your strategy stays on track without you ever lifting a finger. So, who is M1 Finance for? It is, without a doubt, the single best platform for the long-term set-it-and-forget-it wealth builder. It is for the person who has a full-time job, a family, a life, and doesn't have the time or desire to become a full-time stock market analyst. It's for the person who believes that consistent, automated investing in a diversified strategy is the most proven path to wealth, and they just want a tool that makes executing that path as easy as paying their Netflix bill. Now, who is it not for? It is absolutely not for day traders. It's not for people who want to scalp pennies on a stock's intraday movement. M1 Finance, by design, has only 1 or 2 trading windows per day. You put in your orders and they are all executed at once at a specific time. This isn't a bug. It's a core feature. It's a behavioral guardrail designed to prevent you from making impulsive, emotional, fear-based trades. It forces you to be a long-term investor, not a gambler. For a beginner, this limitation is a blessing in disguise. It protects you from your own worst instincts. The platform itself is beautiful. The pie interface is clean, visual, and intuitive. You can see your entire financial strategy at a single glance. They offer all the accounts you need to build serious wealth: individual brokerage accounts, traditional and Roth IRAs, and even trust accounts. Now you might be thinking, okay, what's the catch? The core investing platform, the pies, the automation, the rebalancing is completely free. No commissions, no management fees. They make their money in other ways. They have an optional premium subscription called M1 Plus, which gives you perks like a second trading window, a high-yield checking account, and a slick credit card that offers rewards you can automatically invest back into your pies. They also make money on interest from lending out shares and cash balances, which is standard practice for all brokerages. But for the core user who just wants to build wealth automatically, you can genuinely use this platform for years and never pay a single dime in fees. The only other real con is that because the platform is so focused on the portfolio-level pie system, it's not the best for researching and analyzing individual stocks. You can do it, but it's not the main event. It's like trying to order a single slice of pepperoni at a restaurant famous for its 5-course tasting menu. You can, but you're kind of missing the point. To put it all together, think of it like this. Robinhood and other beginner apps give you a giant, overwhelming bin of every Lego brick ever made and say, good luck, build something. It's liberating but also terrifying. M1 Finance gives you a curated collection of incredible expert-designed Lego kits, the Starship, the Eiffel Tower, with perfect, easy-to-follow instructions. These are the expert pies. But it also tells you, hey, if you feel creative, feel free to take all the pieces from these kits and build your own unique masterpiece. That's the power of custom pies. It provides the structure and guidance beginners desperately need, with a clear path toward customization and control as they gain confidence. It is the perfect bridge from being a nervous novice to a disciplined long-term investor. M1 Finance masters the art of automated wealth building. But what if you want more? What if you want the guidance, but you also crave more powerful tools, more in-depth research, and access to a wider universe of assets, including things like crypto? What if you want a platform that feels less like an automated savings account and more like a true mission control for your entire financial life? Well, our number 2 app is exactly that. It's a platform that started as a feisty underdog, but has now evolved into an absolute powerhouse, a titan of the industry that blends a stunning user interface with professional-grade tools that even Wall Street veterans are starting to use. It takes the best parts of the beginner experience and bolts on a high-performance engine. And we're diving into it right now. Our number 2 app for 2026 is called Apex Trader, and the story behind it is almost as compelling as the technology itself. Apex was founded by a small group of quantitative traders, or quants, from one of the world's most secretive and successful hedge funds. For years, their job was to build sophisticated algorithms using tools that cost tens of thousands of dollars per month. These were clunky, old-school platforms that looked like something out of a 90s movie, but they were incredibly powerful. When they left to start their own venture, they were shocked to find that retail investors in the 2020s were still being given digital toys. They saw a massive gap in the market. They saw millions of new investors being on board with beautiful, simple apps, but what happened next? What happens when you're no longer a beginner? You were forced to either stick with the beginner app and feel limited, or make a terrifying leap to a professional platform that cost a fortune and required a PhD to understand. Apex Trader was born from a single question: what if we could put the engine of a Lamborghini into the body of a Tesla? What if we could give everyday investors the same analytical firepower as a Wall Street pro, but wrap it in an interface that was intuitive, beautiful, and most importantly, free? When you first open Apex, it doesn't intimidate you. It presents you with a clean, customizable dashboard. You can set it to simple mode, and honestly, it looks and feels a lot like the other beginner-friendly apps we've discussed. You can buy and sell stocks with a few taps, view basic charts, and read news. It's comfortable. It's familiar. But then you see a little toggle in the corner labeled Pro Mode. And when you flip that switch, the entire game changes. Suddenly, you're not just looking at a price chart. You're looking at the market's DNA. This is Apex's core genius. It grows with you. It's the only platform that is truly built for the entire journey. From your first $10 investment in an ETF to your first complex multi-leg options trade. But let's talk about the specific tools that put Apex in a league of its own. First is their revolutionary strategy builder. This is where the founder's hedge fund background really shines through. Almost every new trader has ideas. What if I only bought stocks that are making new highs? Or what if I sold a stock whenever this specific indicator crosses a certain line? Historically, to test these ideas, you either had to do it manually, which is impossible, or you had to learn a complex programming language like Python. Apex changes that. Their strategy builder is a simple, visual, drag-and-drop system. You can build a set of rules for buying and selling using plain English blocks. For example, you could drag a block that says when a stock's price, connect it to a block that says crosses above, and then connect that to a block that says the 50-day moving average. Then you add a second condition, and the relative strength index is below 30. You've just built a basic dip buying strategy in about 30 seconds, with zero coding. But here's the magic. You then click Backtest, and Apex will run your strategy against years of historical data for any stock you choose. It will tell you, if you had used this strategy on Apple stock for the past 5 years, you would have made X% with this level of risk. This is an absolute game changer. It transforms you from a gambler making emotional decisions into a scientist testing hypotheses. It allows you to build confidence in a strategy before you risk a single real dollar. This feature alone is something that professionals used to pay thousands for, and Apex gives it away for free. The second killer feature is what they call community intelligence. Now, this isn't your typical social media feed where people are just yelling to the moon and posting rocket emojis. Apex took a data-driven approach. They anonymize and aggregate the trading activity of their most profitable users, the top 1% and 5% of performers on the platform. On any given stocks page, you can see a widget that might say, 78% of top 1% Apex traders who hold this stock added to their position in the last 7 days. Or you might see, the most common technical indicator used by profitable traders analyzing this stock is the Bollinger Bands. This is not opinion. It's not hype. It's actionable data on what the most successful people on the platform are actually doing with their own money. It's like having a quiet, data-driven mentor guiding your research, helping you see what patterns the pros are paying attention to. And third, Apex gives you unparalleled access to raw market data. We're talking about real-time Level 2 data for free. For anyone who doesn't know, Level 1 data is just the best buy and sell price you see on most apps. Level 2 data shows you the entire order book. You can see the full list of buy and sell orders at different price levels, giving you a much deeper understanding of a stock supply and demand in real time. Watching the Level 2 data flow is like going from watching a movie in standard definition to seeing it in 8K IMAX. You see the texture, the depth, and the hidden movements of the market that are invisible to most retail traders. This is the view that professional day traders use to make split-second decisions, and Apex puts it right on your phone. Now, Apex isn't perfect. It has a few significant trade-offs you need to be aware of. The biggest one is the potential for overwhelm. While simple mode is great, the second you flip that pro mode switch, you are hit with a tidal wave of information. For a true, absolute beginner, this can be incredibly intimidating and might lead to analysis paralysis, where you're so overwhelmed with data you can't make a decision. This platform is best for those who have already dipped their toes in the water and are actively seeking to learn more. If your entire investing strategy is just to buy and hold an S&P 500 index fund for 40 years, Apex is massive overkill. It's like buying a professional film editing suite just to trim your vacation videos. The other consideration is that because it's built for more self-sufficient, data-driven traders, their customer support is not as handholdy as some other platforms. You're not going to find a 24/7 live chat with a person who will walk you through setting up a moving average. Their support is excellent for technical issues, but their educational resources are geared more towards explaining what a tool is, not necessarily how you should use it in a strategy. They give you the keys to the race car and a full diagnostic report, but they expect you to learn how to drive it. So, who is Apex Trader for? It's for the ambitious beginner. It's for the person who started on a simpler app, learned the difference between a market and a limit order, and now finds themselves hungry for more. You're the kind of person who sees a chart and wonders why it moved, not just that it did. You want to understand the mechanics of the market, test your own ideas, and use the same data the professionals use to gain an edge. If you view trading and investing not just as a passive activity, but as a skill that you want to develop and master over time, then Apex Trader isn't just the best choice. It's the only choice. Apex Trader Pro gives you the tools of a professional. It gives you the data, the execution speed, the strategic backtesting. It puts you in the driver's seat of a Formula One car. But there's one thing it doesn't do. It doesn't give you a co-pilot. It doesn't give you a world-class navigator whispering in your ear, analyzing billions of data points in real time to help you navigate the track. For years, that kind of power was reserved for billion-dollar hedge funds and their armies of PhDs. Until now, the number one app on our list for 2026 isn't just an app. It's a revolution in personalized finance. It's the co-pilot we've all been waiting for, and it's about to change everything. The number one free trading app for beginners in the United States in 2026 is called Apex AI. And to call it an app is like calling a spaceship a vehicle. It's technically true, but it misses the entire point. Apex AI represents a fundamental paradigm shift in how normal people interact with their money. For decades, we've been told to just buy an index fund, which is good advice, but it's generic. It's one size fits all. Apex AI is the opposite. It's a bespoke, custom-tailored financial strategy engine that fits you like a glove, and it costs nothing to use. So how does it work? When you first open the app, it doesn't show you a chart or a hot stocks list. It starts a conversation. It asks you questions a $500 an hour human financial advisor would ask, but it does it with an infinite amount of patience and zero judgment. It doesn't just ask, what's your risk tolerance? Low, medium, or high? That's a lazy, useless question. Instead, it might present a scenario. Imagine your $10,000 investment dropped to $7,000 overnight. On a scale of 1 to 10, how much sleep would you lose? It learns your emotional response to money, not just your logical one. Then, with your permission, it securely links to your bank accounts. It doesn't just look at your balance. It analyzes your cash flow. It sees you spend $300 a month at Whole Foods, $150 on gasoline, and that you have a recurring subscription to a rock climbing gym. It learns who you are from how you live. You tell it your goals. I want to buy a house in Austin, Texas in 5 years. I want to retire by 50. I want to save enough to take a year off and travel the world. And this is where the magic happens. It synthesizes all of it. Your goals, your fears, your spending habits, your timeline, and your income. And it doesn't just spit out a generic aggressive growth portfolio. It builds your portfolio, gives it a name. It might call it the Austin Down Payment Fund, or the Sabbatical Portfolio. And it explains every single choice it makes in plain English. It'll say something like, okay, for your Austin Down Payment Fund, we need stability but also growth that outpaces inflation. I'm recommending a 60% allocation to a specific low-cost real estate ETF because the Austin housing market is our target. Here's why this particular ETF is better than the other 10 options. I'm also suggesting 20% in a dividend-focused fund to provide steady income and reinvestment, and 20% in inflation-protected treasury bonds as a safety net. This structure has a 92% historical probability of hitting your target goal in 5 years, even with moderate market downturns. Do you understand the strategy? Do you want to proceed? It educates you. It builds your confidence. It doesn't just tell you what to do. It teaches you why you're doing it. This is the co-pilot. You are still the one flying the plane. Every single decision, every trade requires your final approval. Let me tell you about a user I read about on their forum. A woman named Chloe. Chloe was a freelance web developer, 32 years old, and absolutely terrified of the stock market. Her parents had lost a huge chunk of their retirement in 2008, and that financial trauma was deeply ingrained in her. She had over $100,000 sitting in a savings account, losing value to inflation every single day because she was too scared to invest it. She downloaded Apex AI on a whim. During the onboarding, she told the AI about her fear. The AI acknowledged it, didn't dismiss it. It said, "Financial anxiety is completely normal, especially given your family's experience. Let's build a strategy that helps you feel secure above all else." It created for her what it called the Fortress Portfolio. It was incredibly conservative, mostly bonds, blue-chip dividend stocks, things that were about as exciting as watching paint dry. But it was designed to not lose money. The AI explained that the first goal wasn't to get rich, it was to get comfortable. To prove to Chloe that investing didn't have to be a casino. For 6 months she put in a small amount of money. She saw it go up a little. She saw it go down a tiny bit. But it was stable. She was building trust in the system. After 6 months the AI sent her a message. "Chloe, we've maintained stability for 6 months. Your comfort level with market exposure seems to be increasing. I've identified an opportunity to potentially increase your returns by 2% annually with only a minor increase in risk. Would you be open to learning about reallocating just 5% of your portfolio into a broad market index fund?" It didn't push. It asked. It proposed. It educated. Chloe agreed. A year later, she was invested in a balanced 60-40 portfolio. She was beating inflation. And for the first time in her adult life, she wasn't scared of her money. She was in control. That is what a financial co-pilot does. It doesn't just manage assets, it manages emotions. Now the obvious question, how is this free? Sounds too good to be true. And you're right to be skeptical. Apex AI's business model is brilliantly simple. The core AI co-pilot, the portfolio management, and all stock and ETF trading are 100% free. They make their money in 2 ways. First, an optional premium tier called Apex Pro for $50 a month, which gives hyper-advanced users access to complex option strategies, crypto AI analysis, and tax loss harvesting tools that the average beginner will never need. Second, they offer their own high-yield savings account, and they make a small margin on the interest just like a regular bank. Their entire philosophy is that if they can provide overwhelming value for free, they'll attract millions of users, and a small fraction of those will either upgrade or use their banking services, funding the entire ecosystem for everyone else. There's no payment for order flow, no hidden commissions. It's a clean, transparent model. Of course, it's not perfect. Nothing is. The biggest downside is also its greatest strength. You have to trust the AI. While Apex is radically transparent, showing you the data behind every recommendation, you are still placing a significant amount of faith in its algorithm. For people who want to be deeply in the weeds, doing their own manual stock picking and technical analysis, Apex will feel restrictive. It's designed to stop you from making impulsive, emotional mistakes, which for most beginners is a godsend. But for a seasoned day trader, it would feel like having training wheels welded to your bike. The other consideration is data. To get the most out of it, you have to give it access to your financial life. The company uses bank-level encryption and anonymizes all data for its modeling, but you still have to be comfortable with that level of integration. It is, without a doubt, the most powerful and intelligent tool ever offered to a retail investor for free. It's the closest thing we have to putting a seasoned, rational, data-driven hedge fund manager in your pocket. But here's the dangerous truth, and I need you to listen very closely to this. The most sophisticated app, the most brilliant AI, the most user-friendly interface in the world, is utterly useless if the person using it is their own worst enemy. You can have a Formula One car sitting in your driveway, but if you don't know how to drive, you're not going to win any races. You're more likely to crash into a wall. And that is the great, unspoken secret of the market. The app is not the secret weapon. You are. Your mindset, your discipline, your patience, that is the alpha and the omega of your success. We've just spent all this time ranking the best tools for the job, but now we have to talk about the person holding those tools. Because I've seen it 1,000 times. Someone downloads the number one app on our list, funded with $1,000 of their hard-earned money, and within 6 months, their account is decimated. Wiped out. Not because the app failed. Not because the market was unfair. But because they fell victim to the 3 horsemen of the beginner's portfolio apocalypse. Fear, greed, and a complete lack of a plan. Let's talk about greed first. Greed manifests as FOMO, the fear of missing out. You're scrolling through social media and you see some meme stock is up 300% in a week. Everyone is posting screenshots of their massive gains. The little voice in your head starts screaming, "You're missing it. You're being left behind. Everyone else is getting rich, and you're sitting on the sidelines like a fool." So you log into your shiny new app, you dump your money into a stock you know nothing about at an all-time high just as the early investors are cashing out. You've just become their exit liquidity. Greed made you buy a lottery ticket at the exact moment the jackpot was being paid out to someone else. Then comes fear. The stock you just bought predictably starts to fall. It drops 10%. The headlines turn negative. The social media posts are now full of panic. That same little voice, which was screaming with greed a week ago, is now whispering with terror. Get out. It's going to zero. Sell now before you lose everything. So you panic sell, locking in a 10%, 20%, maybe even a 30% loss. You sold at the point of maximum pessimism, often right before the stock finds its footing and begins to recover. You bought high out of greed, you sold low out of fear. You just executed the perfect wealth destruction strategy. And the third horseman? A lack of a plan. This is the engine that powers both fear and greed. Without a plan, you are just a leaf in the wind, pushed around by every news headline and every market fluctuation. You have no anchor. You have no compass. You're just reacting. A plan isn't some complicated 50-page document. It can be as simple as answering 3 questions before you ever click the buy button. Question 1. Why am I buying this? Is it a company you believe in for the long term? Do you understand what they do and how they make money? Do you believe they have a competitive advantage that will allow them to grow for the next 5, 10, or 20 years? Or are you just buying it because someone on the internet told you it was going to the moon? If you can't write down 1 or 2 solid paragraphs explaining why you're investing in a company, you aren't investing. You're gambling. Question 2. At what point would I sell this? This is critical. You need to define your exit strategy before you enter. Are you selling when it hits a certain price target? Or, more importantly, what new information would make you sell? For a long-term investor, a 20% drop in price isn't necessarily a reason to sell. It might be a reason to buy more. The reason to sell is if the fundamental story of the company changes. For example, if their main product becomes obsolete, or a massive scandal erupts, or their competitor releases a far superior product. If your reason for buying in the first place is no longer true, that's your signal to sell. It has nothing to do with the day-to-day noise of the market. And question 3. How does this investment fit into my overall financial goals? Are you saving for a house in 5 years? Retirement in 30 years? Your timeline dictates your risk tolerance. Money you need in the short term should never be exposed to the volatility of the stock market. That money belongs in a high-yield savings account or a CD. The money you're investing in stocks should be money you can afford to not touch for at least 5 years, preferably longer. This long-term perspective is your single greatest defense against fear. When you know you don't need the money tomorrow, you can stomach the market's temporary downturns, confident in your long-term thesis. This distinction is the entire ballgame. Are you an investor or are you a trader? For 99% of beginners, the answer must be investor. A trader tries to time the market, making short-term bets on price movements. It's a full-time job that pits you against the most powerful supercomputers and the brightest minds in finance. It's a game that is heavily stacked against you. An investor doesn't try to time the market. An investor focuses on time in the market. They buy quality assets, pieces of wonderful businesses, and they hold them, allowing them to grow and compound over years and decades. And that word, compound, is the most powerful word in finance. It's the secret sauce. Albert Einstein supposedly called it the eighth wonder of the world. Here's how it works. Let's say you invest $100. It earns a 10% return in the first year. Now you have $110. The next year, you don't earn 10% on your original $100. You earn 10% on the new total $110. So you earn $11 and now you have $121. The year after that, you earn 10% on $121. Your money starts making money. And then, the money your money made starts making its own money. It starts slowly, almost imperceptibly. But over time, it becomes an unstoppable avalanche of wealth. Let's make it real. Imagine you are 25 years old. You start investing just $250 a month. That's about $8 a day, the price of a fancy coffee. You do this consistently until you're 65. Assuming a conservative historical market average return of 9%, how much do you think you'd have? You invested a total of $120,000 over those 40 years. But thanks to the magic of compounding, your account would be worth over $1.1 million. Over $1 million from just $250 a month. If you waited until you were 35 to start, that final number would be less than half, around $440,000. You'd have invested $90,000, only $30,000 less, but your final result is nearly $700,000 smaller. That is the staggering, life-altering power of starting early and letting time do the heavy lifting. This is the game you should be playing. Not the frantic, high-stress game of day trading, but the calm, patient, and incredibly powerful game of long-term ownership. The apps we've discussed are your gateway to playing this game. They are the tools that allow you to buy pieces of the greatest companies in the world, to participate in their growth, and to build your own financial future, one disciplined investment at a time. So you have the world's best apps at your fingertips. You now understand the psychological traps of fear and greed. You have a framework for creating a simple, powerful plan. You see the mathematical certainty of compounding over time. It seems like you have everything you need to succeed. But there is one final piece of the puzzle. One crucial foundational concept that, if ignored, can render all of this other knowledge useless. It's a mistake that even seasoned investors make. And for a beginner, it can be the silent killer of their portfolio. It's the difference between building a sturdy financial house and building one on a foundation of sand. And in our final part, we're going to break down exactly what it is and give you a simple, actionable strategy to ensure your foundation is made of solid rock. That one thing is the profound, almost magical concept of compound interest, harnessed through a strategy so simple, so effective, that it feels like cheating. It's a strategy that turns your biggest perceived weaknesses as a beginner, not having a lot of money and being scared of market crashes, into your greatest strengths. This strategy is called dollar cost averaging, and it is the bedrock of intelligent, long-term wealth creation. Forget trying to time the market. Forget trying to find the next big thing. The entire financial media industry is built to make you believe that you need to be a genius, that you need to predict the future to win. It's a lie. All you need is discipline. Dollar cost averaging, or DCA, is discipline made automatic. Here's how it works. Instead of taking a big chunk of cash, say $10,000, and trying to guess the absolute perfect day to invest it, you commit to investing a smaller, fixed amount of money at a regular interval. Could be $100 every single month. It could be $25 every single Friday. The amount and the frequency don't matter as much as the consistency. You set it and you forget it. Now, why is this so powerful? Because it completely rewires your relationship with market volatility. For most people, a market dip is terrifying. They see red in their portfolio and they panic sell, locking in their losses. But for the DCA investor, a market dip is a discount. It's a sale. Let's imagine you're investing $100 a month into an ETF. In January, the price is $100 a share. Your $100 buys you exactly one share. In February, the market gets shaky, and the price drops to $50. Panic is in the air. But your automatic investment goes through. Your same $100 now buys you 2 shares. In March, the market recovers a bit, and the price is now $75. Your $100 investment buys you 1.33 shares. After 3 months, you've invested $300 and you own 4.33 shares. Your average cost per share isn't $100, it's not $75. It's about $69. You use the market's downturn to lower your average cost automatically, without any stress or emotion. You turn fear into an opportunity. When the market eventually recovers and goes on to new highs, as it has done for over 100 years, your returns are amplified because you bought more when prices were low. This is how you build a sturdy foundation. You aren't trying to build a house in a day during a hurricane. You are laying one brick perfectly every single week, rain or shine. And every single app we have talked about today is built to make this effortless. In Fidelity or Charles Schwab, you can set up automatic investments from your bank account into your chosen mutual funds or ETFs. In M1 Finance, this philosophy is the entire business model. Your pie automatically gets funded and rebalanced with every deposit. In Robinhood, you can set up a recurring investment for a specific stock, ETF, or even crypto down to a single dollar. They have built the tools. All you have to do is turn the key. But this strategy is only one half of the equation. The other half is diversification. Dollar cost averaging is how you invest, but diversification is what you invest in. You've heard the old saying, don't put all your eggs in one basket. In the early 2000s, thousands of Enron employees had their entire life savings and retirement invested in Enron stock. They thought it was a sure thing. When the company collapsed, they weren't just out of a job, they were out of a future. They lost everything. That is the risk of betting on a single company. Even the most promising companies can fail. Diversification is your armor against that kind of catastrophe. And for a beginner, there is no better tool for instant diversification than a low-cost, broad market index fund or ETF. An ETF like VOO, which tracks the S&P 500, doesn't just give you a piece of one company. It gives you a tiny piece of 500 of the largest, most profitable companies in the United States. You own a sliver of Apple, of Microsoft, of Amazon, of Johnson & Johnson. If one of those companies has a bad year, it's cushioned by the other 499. You are not betting on a single horse. You are betting on the entire American economy. So let's put it all together. Here is your simple, actionable strategy. Your blueprint for building a rock-solid financial foundation starting in 2026. Step 1: the mindset shift. Before you do anything, you must promise yourself this. You are not a gambler. You are not looking for a lottery ticket. You are an owner. You are becoming a part owner of the greatest wealth creation engine in the history of the world. You are playing the long game. This is a 10, 20, 30-year plan, not a 10-day plan. Step 2: pick your app. Review the 5 we've discussed. Are you a hands-off, set-it-and-forget-it investor? M1 Finance or Fidelity might be your speed. Do you want a super clean interface and the ability to dabble in crypto? Robinhood could be the one. Do you want a powerhouse of research and banking integration? Look at Schwab or E-Trade. Pick the one that feels right for you and complete the sign-up process. Step 3: choose your foundation. Don't overthink this. Start with one simple, broadly diversified, low-cost ETF. For 90% of beginners, an S&P 500 index fund is a phenomenal starting point. Something like VOOIVV or SPY, or a total stock market fund like VTI. These are not speculative bets. They are the bedrock of countless successful portfolios. Step 4: automate the system. This is the most crucial mechanical step. Decide on an amount of money you can comfortably, consistently invest without impacting your ability to pay your bills. Can be $20 a week. Can be $200 a month. The initial amount is far less important than the consistency. Then, go into your chosen app, find the recurring investment feature, and set it up. Link your bank account, choose your ETF, set the amount and the frequency, and turn it on. You have now built your own personal wealth machine. And finally, step 5, the hardest part. Do nothing. Let the machine work. Don't check it every day. Don't listen to the talking heads on TV screaming about the next crash or the next bubble. Don't get distracted by your friend who made 1,000% on some meme stock. He won't tell you when he loses it all next month. Your job is to live your life, to focus on your career, your family, and your skills, all while your automated system quietly, patiently, builds your wealth in the background. There was a famous study done by Fidelity a few years back. They analyzed their accounts to see which type of investor had the best returns. The answer was astonishing. The top performers were people who were dead. The second best performers were people who had forgotten they even had a Fidelity account. The lesson is profound. Once you set up a sound strategy, your own meddling is the single greatest threat to your success. The 5 apps we've covered today are more than just software. They are gateways. They are the keys to a kingdom that, for generations, was locked away for the wealthy. The barrier to entry has been obliterated. You no longer need a broker in a fancy suit. You no longer need thousands of dollars just to get started. You have everything you need on the phone in your pocket. The question is no longer if you can start building your financial future. The only question is, will you? The person you will be in 10 years, in 2036, is entirely dependent on the choices you make today. That future version of you will either be thanking you for having the courage and discipline to start, or they will be wishing you had. Let's make sure they're thanking you. Which app are you going to try first? Let me know in the comments below. I read every single one. If you got any value from this video, a simple tap of the like button helps this channel grow and reach more people just like you. And if you want to continue building your financial future, one smart decision at a time, make sure you subscribe and hit that bell so you don't miss what's next. Thank you for watching, and I'll see you in the future.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.